So Glenn, I know another due date's coming up in our world, but explain to me these estimated taxes and paying them quarterly, and how does that affect me as an individual? How does it affect the business?
Boy, estimated taxes is just something that you have to pay. If you owe income, if you have income, you have to pay your taxes ratably throughout the year. You don't get to just pay it on April 15th. The government wants their money when you earn it ratably throughout the year. Most people get a paycheck, and those taxes are withheld from their paycheck throughout the year. And usually when you file your tax return, if they do that right, you'll get a small refund. When you're an entrepreneur or self-employed, nobody's withholding taxes from you generally, so you have to pay quarterly estimates. Well, those quarterly estimates become quite cumbersome because it ends up being a pretty large number, because you got to pay not your federal income tax, but you got to pay your self-employment tax as well. So we coach our clients to set aside half their income for tax, and then when it's time to pay an estimate, we go in there and tap it from that account and pay those estimates. But generally, as a business owner, if you're a flow-through entity like an S Corp or a LLC, the company only really is going to pay probably two taxes that are main. And one is going to be the SALT, state and local state tax, that the company can pay on behalf of the shareholder or partner, so the company can deduct it. Because as an individual, you're not allowed to deduct that tax anymore because it's capped. But now, in Ohio at least, and multiple other states, you can deduct that at the company level. So that's a tax estimate that you want to pay, and then you true that up at tax time. The other thing is, as a entity, you have to pay city income taxes. In Ohio, we have the cities where they have to pay that. So that's a
we
quarterly
all
estimate.
hate those now, don't we?
They are a doozy. If you're not from Ohio, and if you live in a state that doesn't have a city tax, you're very fortunate. But if not, this is something we have to deal with. So we have to pay those city taxes every quarter. Then as an individual, when that income flows through to you, or you're just a solopreneur or a single member LLC, you got to pay your federal estimated tax every quarter. You may or may not have to pay your state income tax every quarter, depending where your sources of income from investments, other businesses that they can't do a SALT tax payment for you. And then, of course, you have your school district income tax. And then, of course, you got to pay your city income tax, depending on what city you live on or whether they give you credit for that. So what ends up happening is if you have a professional that's helping with your taxes, they set that baseline up when they prepare your tax returns for the year. Then they set out and say, here are your estimates for the year, for the business and for personal, and you can plan on that number. And then if you're a business owner, usually your tax professional and your accountant is going to track your income and expenses throughout the year and your profit, and they'll adjust those estimates up or down based on how you're performing. Nobody wants to overpay their taxes, but you certainly don't want to underpay your taxes estimates, because then you get a penalty. So generally, when you're an entrepreneur, you generally tend to overpay your taxes. And if you do, you just credit that to the next year. So it's kind of nice.
So what is this? I know I've heard these terms before, but what is it, like your safe harbor or something in regards to our estimated payments?
There's rules and regulations on what that looks like. It's either 97% of the prior year, 110%, or the current year. But I just like to say to my clients, you rather have them overpay early and taper off later. Cash flow wise and mentally, it's easier for them to do that. I know some people are going to argue, well, the government just has your money. Whatever, it's not going to be a gajillion dollars, right? This is for the average person, maybe paying $15,000, $20,000 estimate. So what, they pay an extra couple $1,000. It's better to overpay and taper off at the end of the year versus underpay and you got to catch up. It just kills people's cash flow. But generally, let's say your taxes are $100,000 for the prior year. We would say that your safe harbor is 110% of that. So $110,000. If you're going to make the same or more, if you pay at least $110,000 in, you're not going to get a penalty. So that would be whatever that is, $27,500 a quarter, and you're safe. Okay. Now you could win the lottery and have to pay, $300 million in tax. You don't have to pay that till April 15th because that's not it's not based on your prior year. So we have you pay that 110% for Q1, Q2. Wait a minute, Q3, they might be going up. We'll definitely pay that. Wait, Q4, they plummeted and they don't owe that much. The Q4 estimate will drop it from the 27.5 down to like 18,000, whatever it needs to be. So they're going to get the refund right away, or not a refund, but they just won't have to pay it. And that's how you would do it.